back here and welcome back to another video. I'm just going to explain a little bit about A&A Capital and how you can avail of our services before we dive into the video. So this is our website. You can just go into aacapitalltd.com and you can read about us over here. And one of the main features that we have is we have a free public channel for all the people that are interested. So all you do is you just go back and you just click the Telegram button or the phone, whichever you prefer, and then click allow, and then that will bring you to our Telegram group. Now, you can also read about us. You can also read about why you would like to choose us. You can see our services. So we offer all these services, including trading and education. And if you have any queries, you can drop us a message. Our WhatsApp links are here, our email is here, and our Telegram is here. Make sure to follow it for the educational content on there as well. And if you would like to purchase any service, so for example, if you want to go to our trades journal or if you want to read more about it, just go on here and you can read about what's on offer. You can also purchase our Forex course through this button and our mentorship. So we offer one-to-one mentorship to any clients that are interested. Have a read about that and you can purchase it over here as well. If you want to read about getting affiliated with our company, then you can have a read and fill out our form and we'll get back to you as soon as possible. And then have a read of our reviews as well. So we have our reviews over here. Have a read of those from clients, and then you can decide yourself if you're interested as well. Hope this helps. Now let's get to the video. So let's dive into the Bitcoin video. So from this title, you may be a little bit cautious about where Bitcoin's heading. Now, Bitcoin has been in the news quite a bit recently, and it collapsed recently as well. Now, I'll explain why it did collapse and how we predicted this in advance. I'll even probably try and put proof of our prediction beforehand, probably on the screen if I can get it on the screen. The collapse, I'll explain why, and I'll explain where it's heading, and I'll explain where we're looking to trade it and where we're looking to invest in it as well. Right, so let's dive in. So we'll start off with the daily time frame. Now, before I get into price action, you probably know from our recent videos that we are institutional type traders. Now we trade ICT and we also trade institution trading. Now, before we dive into that, I want to explain something that we tell all our clients at A&A Capital, and this is something called mass psychology. So mass psychology came into effect in Bitcoin. Now, what is mass psychology? So mass psychology is just basically how everyone is thinking. Now, ever since cryptocurrency has been in the news, a lot of people with their stimulus checks or their COVID payments, etc., they all have spare money available. That a lot of people are now investing into these type of things because they feel it is easy money. So there are a lot of people were investing into stocks, which caused a mini collapse, and a lot of people were investing in crypto, like Bitcoin or Litecoin. Now, I explained, I predicted the collapse in crypto beforehand, and the principle that I predicted it on was mass psychology. So basically what this states is that if a lot of people are doing something, it's not going to happen, right? Because typically what a lot of people think is that if the number of buyers is greater than the number of sellers, then price will go up. And if the number of sellers is greater than the number of buyers, then price will go down. Now, I don't want to sound pessimistic or scare you, but that isn't how the financial markets work. That isn't how stock works. That isn't how crypto works. That isn't how Forex works. How this works is that central banks have an algorithm. Now, the algorithm is what controls the market. And that algorithm, it runs so that it takes your money. That's the sad truth of it. This isn't a fair market. It's heavily run by banks and institutions that inject lots of money into these markets. Therefore, manipulating price was to catch the ordinary traders out, like the support and resistance traders. Now, even worse than these ordinary traders are the people that don't know what they're doing and they expect a big return in crypto by just investing their stimulus checks. Now, that was the basis behind the collapse. A lot of people were getting into crypto. Now, obviously, the banks won't let the retail traders win. So, what happened is crypto collapsed so as to take out all these retail traders out of the market so that banks can take their money. That's how trading works. Now, that's how I predicted this drop. Now, just one aspect of it specifically is this. So, a lot of retail traders, what do they trade? They trade support and resistance, right? So, if it's how a lot of people have been taught to trade. So, how does it work? Well, this is a point of resistance where prices come down. When it's come down, it should now act as support. It should now, and then this was a point of resistance. Break it, it should now act as a support, right? That's just how a lot of traders have been taught. And then there's also a trend line that traders have been taught. Now, we don't trade trend lines, we use trend lines as a form of manipulation. So, what retail traders are doing, we know how they'll be manipulated in advance. So, so when it broke this high, I instructed all our clients to sell. Why did I say sell? Because if we look at this resistance, right, that is a point of resistance. We broke it and then that turned to support. Now, this is retail terminology. So what did it do? That would have been where retail traders were buying. Okay, so now people were thinking 100k Bitcoin, 100k Bitcoin, 100k Bitcoin, and a lot of people would have got in. Now, where else would orders have been sitting? Once we broke this high, this is where we call buy side liquidity was resting. So a lot of buy orders were resting. So what happened was we broke this high. So a lot of retail traders' orders would have been resting above that high. That's how I knew that we were going to collapse, because this was a major point of resistance. Once broken, a lot of retail orders would have been sitting there. Now, what happened was we saw a little collapse, not too much, and then we broke this high again. Whenever we break this high, there's always going to be retail orders sitting there and people thinking 100k, 100k, 100k. And what's this massive candle up? That's what we call an institutional manipulation candle. When we broke this high, that was a massive candle. So all these people thinking, oh, I don't want to get out, I don't want to miss out on this move, I don't want to miss out on this move when we broke that high, all these orders would have been triggered. So many people would have been buying here. What did the banks do? The banks collapsed the market, right? So that's sort of the principle of mass psychology involved in price action. So when a lot of people are doing it, when a lot of people were buying, we didn't buy, we sold. When a lot of people were buying, we didn't buy, we sold, because we knew that the crypto market is way overextended. Banks aren't going to let the retail traders win that long. That's why we wanted a collapse, and that's why we expected a collapse and we received the collapse as well. Now, in terms of trading it, we actually shorted it over here on this level. Why did we short it? Because what happened was, let's dive into the 4-hour time frame. Okay. Why did we short the market over here? Right. So, a lot of people were wondering, what do we do now? Now, when I said to get out of Bitcoin, especially at this level over here. Why did I say this level over here? Well, if we look over here, what was that massive institutional candle on the daily time frame? This is this move. So this was where institutions had buy orders to manipulate the buy side liquidity. We then broke down. Now we still had bullish orders resting over here for these institutions, along with a bearish order block, where the institutions had their sell orders. So their manipulation, from this manipulation, the institutions or the institutional algorithm would have had to break even before it can continue further down, because otherwise this buy order would be going into massive loss. Now they want to break even. Well, where will they break even? They'll break even where the order started. And where did it start? It started right over here. This is what we call a mitigation block. and we tapped in perfectly into that, and then that would have been short, and then we would have been able to short the market over here. There we go. That's the bottom of the move, and we would have tapped in, and then we would have, what did we see? We then collapsed. That is what we call a mitigation block, and that is explained further in our course if you want to purchase it. But yeah, I actually did expect a move higher because this is what we call a retail wedge. So this, I expected this to be manipulated. That's why I wrote buy side liquidity. I expected another run above this high. But I did say that take all your orders out over here because there's no guarantee about where price can go. So I did say to take your orders out, but I also did expect possibly a run over here. Yeah. Right, so then we collapsed. Now what are we expecting? Again, what are retail traders doing? All retail traders are doing the same thing. Buy the dip, right? Buy the dip. Now, why are they buying the dip? First thing is because we have equal lows over here. So what are equal lows a sign of? A sign of support for retail traders. So when price came over here, they feel that it found support and we're now going to go to 100k, 100k, 100k. I'm afraid that's not going to happen. Why is it not going to happen? I'll explain now. Because we have retail traders buying. What does that mean? We have sell side liquidity resting below the lows. And that's why we're going to hunt it. Before we hunt it, we need to induce buyers. So what are we going to do? This is my prediction on Bitcoin. We can either raid the lows straight away from this bearish order block. So we triggered this bearish order block over here. This bearish order block price came in and it came down. So we can either make a run below, or another thing that we can do is we can raid these equal highs. So this is a retail level. Why? Because of support turned into resistance. So what do I expect? I either expect a run over here to the mitigation block and then down all the way to raid the lows. Or an alternative could be coming up to this bearish order block, filling this imbalance. Now this isn't actually an imbalance. Why? Because we had a wick coming in above and filling that candle. So this isn't a high probability setup, but I did expect it as a possibility. More that I expect is this. This is the mitigation block. Why? Because this is where the origin of the institutional orders were, where price went up to clear these highs, this retail level, and then we collapsed all the way down. So we still possibly have bullish orders over here. Now I know a lot of you would probably say that we've mitigated it over here, but a common characteristic of mitigation blocks is even if it's mitigated on the first move, it comes back to clear the highs, mitigate the move again to a bearish order block, and then come down. So that is my prediction on Bitcoin. I do expect price to come about 49.50k. I do feel that this is a higher probability setup coming here to gain liquidity and then also to trigger further orders before going down. But then again, there is still a possibility that I mentioned before that we're going to raid the lows. What makes this high probability? This is what makes it high probability. Equal lows resting below an imbalance, resting above an imbalance, sorry. So we have buy the dip traders here. Where do they have their SLs? One SL is going to be over here below the equal lows, what they consider a support. Another SL is where, for the conservative traders that like to trade 1 to 2 risk rewards, they're going to be below the next structure. What's this next structure? It's this support level. What I really like about this support level is that this support level is right above an imbalance, a daily imbalance. Now we know the price likes to fill its imbalances, right? That's what the algorithm does. So an imbalance is basically where the algorithm moves too fast that it does not induce sellers. Now the higher probability imbalances that tend to be filled are the ones below or above a structure, or the ones above or below liquidity, such as equal lows. So if you're interested more in all these concepts, then again you can purchase our course, which will explain it all. So yeah, buy the dip traders, either they're going to be induced with their buy side liquidity orders, and then price is going to come down, or alternatively price is going to come down. But it is very, very high probability that price will come down to 20k, around 20k region, and that is where we will possibly look for longs after we receive our A&A confirmation to clear this buy side liquidity, and then 100k would be the next target. If you do have any questions, feel free to drop it in the comment section. But again, don't forget to join our Telegram channel that's free for the public. Alternatively, if you're interested in our premium channel, then by all means email us and we'll be happy to get back to you as soon as possible. Right, guys, best of luck in your trading and hope this helps. Remember, 20k is the next target for Bitcoin. Don't invest right now. Right, hope this helps. Best of luck to you guys.